you just don't realize that how much tax you have to pay. You don't, and then you don't know the vehicles that you can utilize to protect yourself.
Like what have you found to be the biggest frustration when it comes to the 1031 exchange and or exiting like a business? You mentioned you exited a business and you had huge capital gains tax. Talk to us about those frustrations.
Yeah, so I could talk a lot about the frustration of selling a business that you put all your blood, sweat, and tears in, don't get a paycheck for many years, and you finally build it to a sellable asset. And for us, we sold, I'll give you kind of roundabout numbers. We sold for around $4.5 million, which I know is not a lot of money, but for me it was. It's like so I got about 50% of that, and we got a 3-year payout. And I was very fortunate. I have a CPA that kind of connected me with people, but you just don't realize that how much tax you have to pay. You don't, and then you don't know the vehicles that you can utilize to protect yourself. So luckily I had a guy very similar to you, Brett, that was able to kind of guide me through it. But he's more defensive. So for example, we did a lot of opportunity zones. I don't know if that's a strategy that you recommend, but we did a lot of opportunity zones. And then there's a formula that you have to use that you can't just put all your money in opportunity zones, right? You have to put only a percentage. And then there was this other thing I had to do. It was kind of a tax credit. I had to spend $95,000 to save some wetlands project. And because I did that, I got like 10 to 1 or something like that on my tax savings. So everything I did was really defense based. My business partner, what he did is he went offense based, and he had a different financial advisor, and they said, well, screw it. We're going to pay the taxes, but we're going to invest the money that we're going to make more money than if you pay taxes, which I think is a little risky because nothing's guaranteed in life. So I kind of like the defensive thing, but unfortunately, luckily, if it wasn't for my CPA, I would have no idea like about any of this stuff.
Absolutely. Yeah. And by the way, that's so important to mention. Right? You want to have a team, you have a dream team, and you want to have a strategy that's going to solve your challenge. And certain people have different strategies and different outcomes. Part of what we specialize in, a thing called a deferred sales trust, where I say you can have your cake and eat it too. You can not only defer the tax, but you can also go back into other business ventures, other commercial real estate deals. Also, you can put it just to the stock market and grow your wealth. You can be riskier with some, you can be less riskier with others. In other words, you can have liquidity, you can have diversification, and it's not a Delaware statutory trust. For those that are listening, getting confused with the Delaware 1031, it's a deferred sales trust, and it works for crypto, business, real estate, primary homes. It can save a failing 1031 exchange. If anyone wants to learn more about this, you can go to capitalgainstaxsolutions.com. You can download our free ebook, and it'll teach you the basics of how to implement this strategy. That being said, we're running out of time. Mr. Pete, are you ready for the lightning round?
I sure am. Just one thing. If you are thinking about selling your business, go see Brett and his team first. Because like you need to know what to do prior to actually selling the business.
Yeah, thank you for saying that. Yeah, because it does have to be set up prior to. Appreciate the plug there.